Lori, you recently did up your target on the S&P to about 4250. Well, the markets listened to you, and we're actually above that right now. So where to now? What do you think the market currently is pricing in?
Well, thanks for having me on, Mike. And look, I think the market has really been very forward-looking. I think in 2022, we pre-traded 2023. And I think that this year, we're really pre-trading 2024. And we've started to notice on some of our indicators that the market clearly is starting to price in a recovery in 2024. Not a fantastic one, but one that is moving up nonetheless.
And so that would imply that you think the market is correct in believing that we get an earnings rebound going into next year and things fall into place fundamentally. Is that without a recession, or is that kind of beyond a recession?
I don't know if we're going to end up calling it a recession. I think that whatever it is, it's started, whether it ends up being a growth scare, something close to a recession, a technical mild recession. I think the market's been prepared for that. I think we priced that in at the October lows. If it gets far worse than that and kind of bleeds deep into 2024, then I think you might need to see the markets reprice lower. But if the economic damage is fairly contained into this year, I think that we already paid the price for that last year. And frankly, and I hate to say this, but, the fact that we are getting some confirming evidence that we're starting to see some of the breakdown in terms of consumer behavior. I think that it's actually good news for the market in an indirect way, simply because we do need whatever this is to go ahead and get it started, so we're not just constantly pushing it down into the future.
Yeah, absolutely. We've been in those periods before where we can't get off of that late cycle vigil. Within the market, what looks interesting right now? Everyone's talked about the growth stock dominance, and small caps maybe bouncing to catch up a little bit today.
Well, small caps are having a fantastic day. Last I checked, we were up about 3.4% on the Russell 2000. And I thought it was interesting in the context of today's jobs report. We saw the unemployment rate tick up just a little bit. And one of the charts that we've had sort of a lot of interest in our investor meetings has been one that shows that typically if you're in the middle of a recession and the unemployment rate starts to tick up, that's about when the small cap trade usually inflects. Now, I think it actually inflected, kind of at least started trying to do that last summer. It got interrupted by SVB, so I think this is really kind of a continuation. But really the idea is, once everyone sort of knows that certain things are breaking down and that economic damage is upon us, it's usually already priced into the small cap part of the market. So I think that's one of the reasons why it's rotating so heavily today. Also, frankly, I think that we're seeing the value trade in general catch up, and small cap has become synonymous with that value trade. And we've seen certain things suggesting that the growth trade is ready to take a breather, perhaps not to go down, but in terms of just rotating some of that leadership away and letting the rally broaden out. Certainly small caps have been trying to fight to reclaim some of that leadership, and they're having a good day so far.
Yeah, absolutely. This would be kind of the easy way for those divergences to take care of themselves as opposed to the hard way. Lori, great to talk to you. Thanks so much.